Strategy Roundtable discussion where we talk about current market conditions and answer any questions you might have about your subscription, how to hedge your portfolio as market volatility is rising today, and approach to how to deal with uncertainty in the market. If you have any questions, please enter them at this time. Disclosures, let's talk about disclosures. They're very important. If this is your first live event and you haven't seen these disclosures, I encourage you to visit optionscreening.com so you can understand the risk and suitability associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, before we jump into trading psychology, let's talk about current market conditions. We are breaching important levels, right? We're breaching important levels on SPX. October lows, right? We're looking at these charts. Remove this. Right, so these are October lows. We're trading slightly below them, right? For this is the weekly chart. Each candlestick is 1 week, what triggered sell-off is again, government reopened and people were concerned about the state of the economy since we didn't have any data point. And yesterday we got the data for unemployment data for the months of September, and it does show you that unemployment rate went up. Initially, it showed that more jobs were created than expected. The market rally after NVIDIA earnings and unemployment data then reversed to the downside. So the fear of stretched valuations on AI stocks and also on the on potentially that unemployment rate is rising rapidly, right? And we've seen, Verizon announcing 15,000 job cuts, and we had UPS and many other companies announcing kind of the year of efficiency, right, where you need less people. People argue whether it's due to AI and that people are just more productive. It depends on the sector, right, or industry. I mean, I think developers, when it comes to content creation or customer service, AI definitely gives you an efficiency, so that means you need less people, right? Whether that's causing meaningful market, unemployment rate rise, we can debate that, but it's definitely here. So that's the debate, right? And then the debate is about the interest rate, right? Since there's more jobs created, then maybe you don't need to be so aggressive in cutting rates. On the other side, since unemployment rate did go up in September more rapidly than expected, and we don't have any data for October, November, once that data does arrive on first week of December, that unemployment rate could be much higher. So then you would need to lower interest rate. For now, if you look at the 2-year yield, you don't see any rapid deterioration. We are sitting at the important level, right? It's the April low and the September lows in 2-year yield. So that is the level I'm watching. If you do see a rapid decline, right, and break of these levels, I think the sell-off will accelerate because people, going back to game theory, the mindset will shift that this is not just a healthy correction of 5 to 10%. Potentially the odds of recessions are increasing, right? The odds of recession is increasing. At this point, it's still relatively low. Most economists think we're not in recession, but if the 2-year yield does break this level, then I would follow the bond market. For now, 2-year yield is stable. 10-year is also stable. Junk bonds are also stable, right? So I would say that's the bullish argument, that there's no panic. This is just a healthy correction. And I agree with that. VIX is elevated, right? VIX is at that 2830 level. It's not as high as March, right? 60. It's not as high as during COVID or 2022 during recession, when the rates, we were at 40, right? But we're not that far either, right? So we could be at, one more negative data point, and we could be at 40, kind of a February 22 level. So I mean, they're high historically level. Anything above 20 is, you're talking about, exceptions, right? Not the rule. All right, so that's where the volatility is. Fred, welcome back. So the bond market for now, not, you don't have red signals in the bond market that this is anything but a healthy, I don't know. Well, at this point, 7 to 15% correction on the SPY, right? SPY, I think, is what, 7%? Well, actually, not even 7, 6%, 5.5%, 6%. So that's, that's the SPY level. So that would be the bond market. We talked about in live trading room about the Oracle CDC spread, right? And you could see it's rapidly rising early November. So that's a sign that, investors are asking for higher returns on what you would think is a very stable company, and had very spectacular earnings, right? Right. We talked about that too, like 40% rise. There's a huge backlog of, orders for Oracle services. Their data centers, their AI capabilities, databases, and now it's, actually selling below the earnings, right? So you can definitely see that AI valuations are overstretched, and you have very sharp declines in stocks like Micron, Oracle, and some of the high flying, AI stocks, especially small mid cap. IONQ is under pressure. IRAN is under pressure. Data centers. This is not data centers. This is the rare earth metals, but doesn't matter. It's just high beta overstretched valuation companies that have negative cash flows, right? And they're all, the charts look very similar, right? You can look at Pelletier, you can look at the firm, right? You can look at, Tempest, these, sharp declines because of overstretched valuation, kind of a risk-off trade. Healthcare on the other side, people are rotating to healthcare, right? So healthcare is up, energy is, is an uptrend, and then even stocks like Google, right, are at all-time high, right? So it's not, I mean, there's very few companies like Google, but that just shows you that as long as Google is at all-time high, there's no panic sell-off, right? This is just people are taking profits from their AI positions, and you know, and they are a little bit concerned about possible rise in unemployment, and you know, interest rates are not going lower as fast as possible, right? But you know, people are concerned. People are concerned. Any questions? So if you look at the S&P, right? Let's go through our all exercise, similar exercise. So we are in a negative gamma flip point, right? And there is expiration today. So do expect volatility rising today, since we had VIX expiration on Wednesday. I always careful about the week of the expiration and then the following week, because that all of the positions from November expire, right? And you already seen a lot of positions in December that kind of show you that people are concerned about December. Nobody's concerned about January or February yet. So everybody's just concerned about December. So as November positions expire today, it will shift toward, let's refresh this because the data should be updated by now. Let's see. So let's see. So gamma flip point is still at 7,000. The put fall is at 6,500. SPX is 6,600. So this is a great way to look at the major support is 6,500 on S&P, and SPX at 6,700. And we are trading in the negative gamma flip, right? So we are trading in this red territory, and as long as we're below 7,000, right, that means that bears are in control, right? To get bullish in this market, I would be inclined to buy only buy on a pullback after we can stay for a couple of days above 7,000. As long as we're below 7,000, I would use the opportunity when the market rallies to trim your positions. And then let's go through our exercise, right? You want to close your eyes and just pretend it's Christmas, right? And see if Grinch will steal the Christmas or not this year. Right? Hopefully not. And just see what are the possible scenarios, right? Who has the spread 676.85? Put in an order to close it. Okay, so perfect. So we have different scenarios, right? One scenario is that we are retesting all-time high, right? You talk to Tom Lee, he says Bitcoin is probably going to reach the bottom this week, and it's going to, historically, November, December is very strong, and Bitcoin is going to rally along with the rest of the market, and we're at all-time high, right? So this is the Tom Lees of the world. It's possible, right? It's not like it's impossible, but all the stars have to align, right? And it doesn't have to be all stars. If unemployment rate is actually drops from 4.4 to 4.2 in December, then you will have the strong Christmas rally, which in a week or two we could get close to all-time highs. Scenario 2, no, potentially could get to 6,700, maybe even 6,800, but on the downside, we could also get to the 6,300. We're not that far away from 63, 6,200, right? So that's estimated move analysis based on current demand and supply of the SPX contracts, option contracts, which is the most liquid product, probably one of the most liquid products, if not the most liquid product. And then it's a one standard deviation move. We're just trading in this range. Right, too. Right, maybe another week, maybe 2 weeks of sell-off as we're going to Thanksgiving, and then everybody's going to wait for that December unemployment data, and then Fed interest rate decision. Right, those are the two main events that are probably left this year. And then scenario number 3, maybe U.S. will force Ukraine to adopt peace proposal from Russia, right, and concede a lot of its territory, right? That's probably not going to spook the market, but December data point, right? We were at 4.4. If you rounded it up, I think some people, economists think it's 4.5. That's unemployment rate in September. Then in December, data comes out for basically the effect of October and November, and then unemployment rate is, let's say, 6.7, right? 6.8, right? Then, signs of recession, 2-year yield drops, dollar continues to rally. And then we have scenario 3, right? The retest of 6,000, right? A lot of Grok actually thinks, the bottom will be at 6,000. I don't know how he found that, but then, you can actually look. It will tell you how he makes that decision. But that's scenario number 3, right? Signs of recession, 2-year drops, breaks to that important support level. Gamma put wall usually does equal support, yes. So right now, the largest concentrations of put buying is at 6,500. But it doesn't mean it will hold, right? Because it was 6,700, last week, and it didn't hold. Then it was 6,600, it didn't hold. And you can see right now, there's not a lot of positioning outside of 6,500. There's not a lot of open interest at these round strikes. So and we are in negative gamma, and that's why this pullback could accelerate to the downside. All right, so Joseph, John, Simon, Steve, Fred, Bill, what are we thinking? Andy, how many of you think Tom Lee is right? We're gonna close the year at all-time high, Christmas rally from seasonality point of view. We are at the period of efficiencies. AI is here to stay, and this is just a healthy short-term pullback, and we're at all-time high by end of the year. How many of you say that peers do have some valid points about economy cooling, but not to the point of recession, but just cooling economy? Maybe unemployment is elevated, but we have a strong earnings season and probably stronger next year. And we are at scenario number 2. Potentially, we could get to 6,300, right? That's another 3% pullback is healthy, or 4% pullback, maybe even 6,200. But ultimately, we're gonna have positive, negative news. We're trading in the range. And how many of you think Grok is right, that the bottom is gonna be around 6,000? Number 2, okay. In the trading range, okay. Bill, Fred, thank you. Andy, what do you think? Andy, is this your first time? Not sure if it's your first or not. Fred, John, what do you think? I know you have an opinion. Dr. Simon, Steve, Bill. So for now, I am agree. I think 2 is the most possible scenario, right? 1 standard deviation. I don't think we're gonna get to 7,000, but 6,800, I think totally possible, right? Maybe even 7,000. They're just depending again on the news. But most economists, a lot of economists are concerned that the economy is cooling and that the Fed is behind the bull curve, and we're gonna just like when they were too late lowering interest rate, or raising interest rates because of the tariff, because of the COVID. They're going to be too late to lower interest rates because a lot of people are losing jobs. Maybe it's because of AI, maybe because companies are more efficient, maybe it's just because there's less demand, right? And global economy is cool, but they're behind the bull curve. So I'm going to go with 2. Right, go with 2 was the idea that at 67, as long as we are below the gamma flip point, 6,700. I don't know why it says right here, 67. As long as we're below that level, bulls are in control. Bears are in control, right? So I would use this as an opportunity to trim the position, right? If we do get above 6,700, then I would, get more bullish. I think if we do get to 6,200 to 6,300, that would be excessive. Then maybe basically, I would consider buying once we stop selling off on good news or bad news, right? Right now we're selling off on good news and bad news. At the point when we stop selling off on good or bad news, then I would start considering that the bottom is in place. But right now, there is no signs of bottoming process that it started. So that means you need to be, I propose to be patient and waiting. How do we help on Tradespoon? If you haven't traded through these volatility terms and you actually want to invest into your education, I do strongly encourage you, not strongly, but you have an opportunity. You do have an opportunity to have one-on-one coaching with Keith, right? Keith is from Options Hotline. He's leading our live trading room. Many of you already know him. If you have large portfolio, right, or if you have small portfolio but you starting new, right, and you do want to have that guidance, right, it's very easy to make money when the market always goes up. It's relatively hard to make money or not lose all that money when the market is trading lower. So I would encourage you to schedule one-on-one consultation with, go to contacts, schedule consultation, and ask to talk to Keith. He'll, first consultation is always free. He'll evaluate and see if there's a synergy. But he's very strong in option trading. He understands market conditions, and he's an ex-market maker. He worked at hedge funds. He has been doing coaching for a very long time. This is something that I encourage you to do. But that requires time, requires financial commitment. So if that's not the right timing, which totally understand, we do have Elite Circle. Elite Circle is actually where you can see how I trade, right? Sure, I closed the December QQQ put spread because I think the market is short-term is oversold, probably will bounce back. So I did close December contracts, the short hedge, and also long Morgan Stanley position, because I feel like market is probably going to continue going lower, and I would be a seller into the rallies, but at this point probably you want to be market neutral, right? Delta neutral on your portfolio. If the market drops 2%, you're not making money. It rises, you're not making money. But you can rebalance your short and longs, right? When it sells off, maybe close some of the shorts. When it rallies, maybe close some of your longs, right? And I did close NVIDIA hedge, NVIDIA iron condor. NVIDIA iron condor. I mean, you do have combination of both stock and option trades. It's not all option trades. Some people say, well, Vlad, you only trade in options. That's not for me. I do trade stocks. So Caterpillar, right? I trimmed Caterpillar position when the market did bounce back. So you also see examples of stock and option trades. Some of them are more aggressive, like NVIDIA, right? This is where I'm looking for. I collected a premium of, what did I collect? 80 cents, right? So I collected 80 cents and I'm risking $2.50 minus 80 cents is $1.70, right? So $1.70, right? So I potentially make 80 cents over $1.70, about 40–50% return overnight, right? These are aggressive trades. Sometimes I'm long volatility, and then you could have 100%, 200% return. But these are more aggressive strategies, option strategies, to kind of look for higher returns on capital. I also have conservative, JEPQ, or where I'm just looking for dividend growth and dividend yield. So that's Elite Circle. You can participate live with Keith and I. We're both in charge of the live trading room, so I encourage you to do that. If you don't have time to be there live, we do have recordings, so you can watch the recordings. You can see all of my trades. These are synchronized with broker dealer. You can see the trades live, and you can enter your phone number for SMS messages. So I encourage you to try this out, Elite Circle, or schedule a one-on-one consultation with Keith. Sorry, I have to. So that's all I have for today. I got to meet with Keith. If you have any questions, schedule consultation with Keith. You don't have to sign up for coach, and this is a free service, and he can help you navigate current market volatility. And if you want to see what I trade real time with emails or recordings, then I encourage you to sign up for Elite Circle. or you can, I know we're promoting shadow trader, spread trader. Spread trader is just spreads without stocks or single options. And then shadow trader is just you see all of our trades. That's all I have for today. Thank you very much. Have a great weekend, and I hope to see you soon. And Luna, thank you, Fred. I will make sure I say hi to Luna. Thank you. She doesn't listen to me. She's my wife's dog, so we don't talk a lot. But we do go on a walk. So, but okay, thank you. I'll see you guys soon.